Now to dive deeper into this week's earnings, I'm joined by John Allison, the CEO of Unio Capital. John, always a pleasure to have you.
Pleasure to be here.
Thank you for joining us. John, markets were down today, partly because of concern that this earnings season could be a little ugly. Reuters is forecasting that S&P 500 companies will report a 2.9% decline in earnings this quarter. Are we going to see a big market correction?
As I was telling you, a bit before, I don't think so. I don't think the average of what happens to earnings, whether they're down 3% or 4% or minus 2%, is the big story, because I think it's been expected by people. I was on your show a number of months ago saying I thought this was going to be happening. I think the real story is going to be what happens to important individual securities within the S&P.
Which ones?
Any of the bellwethers, you can take your pick. I'm saying if Apple were to have very bad earnings, I think that would send real shockwaves. If some of the digital media companies, whether it's LinkedIn or Workday or Twitter, were to have poor earnings, or Exxon were to have poor, I think those kinds of things, or for that matter, good earnings.
So you think the market will be fairly resilient to the broader trend?
I do, because I don't think that's really where the potholes lies in the individual stocks. The upside lie in the individual stock. As I was saying to you before the show, I think the U.S. is a big macro play is over, and I think what's really
Why is the macro play over?
Because I think the big tailwinds have receded. All we have now is this air cushion of interest rates, which is buoying us all up, but we don't have any quantitative easing. We don't have any huge coming up from the economic cycle as we did in 2009-10.
Well, John, the strong dollar is certainly one of the factors that's expected to hit multinational corporations. The general economic slowdown as well. Are these the big reasons that you think companies are going to be hit?
Yeah, I think the dollar is definitely a reason, and I've personally been through that before, back in the 80s, and it affects things. Earnings are going to be less because of the strong dollar. On the other hand, people are smart and they bake it into their expectations.
What impact is a strong dollar going to have on companies' actions? Are we going to see an increase in outsourcing, for example?
I think you can see an increase in outsourcing. You can also see a big increase in acquisitions. If you're a U.S. company and you can buy a European company with the euro where it is, it's very attractive, or for that matter, a Japanese company. And we've seen enormous amounts of corporate activity, and I think we're going to see more of that. And that's going to be one of the wild cards, the big surprises.
All right, so more M&A activity. Are we going to see companies cut down on costs to improve their bottom line? And is that going to affect the hiring outlook for the U.S.?
I think companies are always trying to find ways to be effective, but I think they've reached the point where they actually need people. So I think there's pressure to actually hire people, not to cut people. I think where companies are going to try to make up for the fact that it's very tough to cut costs is to buy back their stock. And as I was telling you in the show, the U.S. companies have bought $4 trillion worth of their stock in the last 10 years. A domestic U.S. mutual fund ETF holders have only invested $100 billion in the stock market. So I think buybacks could be a very big factor.
Buybacks and M&A. Now, oil has been a very big factor as well. Obviously, companies in the energy sector, oil companies, their earnings are going to take a hit. But is there going to be a cushion for other companies because of the lower oil prices?
Yes. I mean, it clearly helps auto companies. It clearly helps Federal Express. It clearly helps airlines. It clearly helps chemical companies that have oil inputs. So that's great. At the same time, energy companies, as the oil price continues to sort of find its bottom, whenever that's going to be and wherever it's going to be, I think it's $40, $50 a barrel, they're becoming better values as we speak.
JP Morgan and Wells Fargo are amongst the big ones reporting tomorrow. Shares of JP Morgan up 0.6%. Investors cautiously optimistic. What are your forecasts?
I think they're going to either make their numbers or be slightly below. If they're slightly below, I'm talking JP Morgan now. If they're slightly below, I think that's okay, because I think any shortfall in a company that's actually got some real earnings power is a great opportunity to buy the company.
John, it's hard for banks to make money with these tighter regulations.
It is. The thing is, tight regulations impose huge costs, huge burdens, and all the rest of it, but they also create an oligopoly, and that's both. If you're in one respect, if you're an investor, it's a good thing that there's an oligopoly. It's very tough to get into the banking business today. At the same time, socially, I'm not sure how great it is that we have an oligopoly of banks, but it is what it is, and I think they're benefited from that. So regulation is actually a moat that prevents people from getting in.
You don't expect the financial sector to have a big miss?
No, I think they've had slow trading results, so I think it's going to hurt them. But it depends on whether they can make it up elsewhere, as for example in M&A and that sort of thing. So I think it's no big misses. I think just
John, you've mentioned that you want to focus on the micro and big bellwethers. Well, Intel, that's a bellwether. They're reporting tomorrow. What are your forecasts?
It would not surprise me at all, and I wouldn't care less if Intel came in under its numbers. We own Intel. I would buy more of Intel because I think Intel's future is actually going to be happening at the end of this year and next year, when I think there's going to be actually a very big surprising increase in the whole PC and productivity business, of which they will be a beneficiary. So short term, they could be, hit their numbers, miss their numbers. I think it's irrelevant in terms of the next 12 months.
But what would it say for the tech sector?
I don't think Intel is enough of an old technology company that I don't think that would have a bellwether effect on it. But if some company like Apple, which I think will be okay, if it came in with bad earnings, or if a whole host of digital media companies, then I think that would negatively affect the tech sector.
All right, we'll wait and see. Thank you so much, John Allison, CEO of Unio Capital.